Hi, long time no see. The crypto market is shocking. Today everything is red. It has dropped to a record low in recent days. I'll tell you what I've been doing in the market lately and what my thoughts are moving forward. Let's start with the fact that I recommend following my other social media. I'll leave the links below. There's more content there, and in particular on Instagram I showed my trades at the time of my exit. So here, on the 16th of February, I completely exited the market. It's available in the stories. By the way, is there one on Telegram? Good question. I can't check from my computer. For some reason, the posts aren't showing up for me. But I think I also posted it in the stories section there. And make sure to subscribe to my Telegram as well. I also share important moments there. Moreover, stories on Telegram are saved forever. Take a look, check it out. It might still be hanging there. Here, it will be useful. So on the 16th, I completely exited the market. What's going on with altcoins and Bitcoin? And let me explain my thoughts. I'll explain what happened, what I expected, what I didn't expect, and what will happen next. For the last 2 years, I've been trading on the Bybit exchange. This is the top platform in terms of trading volume and liquidity, which means your orders will be executed here at the best prices and with minimal slippage. Just by doing this, you'll save a few $100s a month compared to trading on any other exchange. In addition, there are low fees and a bonus for signing up through my referral link. From the description, you'll receive a gift ranging from $50 to $30,000 depending on the size of your deposit. Right now, click the link in the description, then hit that button and check out the size of the bonus you'll get for signing up. On average, my followers receive about $100 for signing up on the Bybit exchange, but if you have a large deposit and a corresponding trading volume, you can get up to $30,000 as a gift. The link is below. Register. It will take just a few minutes. You absolutely always need it when you trade crypto. Now, for example, we are talking only about the spot market, not about futures with leverage. You always need to be fully aware of your trades, of your decisions. Being in the market, if you, for example, entered it somewhere, let's say it has gone up and you're in the market. Every day that you're in the market, it's a decision to stay in the market. This is not an action. So every day that you're in the market, you're making a decision to stay in it and being in the market, while ignoring all possible negative factors dictated by technical analysis, relying only on the hope that Bitcoin has risen vertically in the past and it seems like it will now too, is a mistake. It's a flawed decision, a flawed judgment. How it should rise vertically, especially with a positive news background, is a mistaken decision, a flawed judgment. And why did I exit on February 16th? Notice that here, well, first of all, there's a double top, descending highs. We're not considering the shadows of the candles. We're focusing on the moments where the price has stayed in one place for a while, where it has consolidated. Here we go, descending highs. A double top is forming against a positive news backdrop when there's talk about how they're about to start buying back Bitcoin, even up to the American government reserves and so on. Against this backdrop, a double top is forming. It's not shooting off into space. Moreover, there was hope that from below, notice how strong the tails were during the pullbacks. So during any pullback, the prices were quickly bought back even after the formation of the second peak, including this drop, flash crash on February 3rd. But then what happens after the sharp buyback? The green candle closed. Just wonderful. After that, the price slowly slides down. It's getting closer to the 100 moving average. Notice that there's already volatility, and we're seeing a flat trend under the 100 moving average. The price goes up and they buy it out, it goes under and they buy it out, it goes under and they buy it out, but they buy it out just barely enough to keep it above the 100 moving average. It's not even getting above the 50 anymore. Moreover, it's testing the 50 and instantly the price drops below. This is called a squeeze. In this case, it's not squeezing to a level, it's squeezing to the 100 moving average. And what's happening here with us? You could already see this on February 16th. Here we go, the price is stuck here. Here it is, any little sneeze, and it drops below the 100 moving average. On top of that, we have the death cross coming up soon. And I congratulate you. Today or tomorrow, there are just a few kopecks missing for this to be stated right now. The death cross occurs when the moving averages cross from top to bottom. This confirms it's a bearish trend. It's clear, trend is bearish. It's clear the move occurred. The moving averages are doing this with a delay. Here's the thing. According to price action, this was already visible on the 16th. Before the 16th, I left the market, I left Bitcoin into Bitcoins, closed a good plus and left. I also exited from altcoins. I closed with a significant loss. Getting into altcoins was actually a mistake because I jumped in way too early before the trend change for altcoins, hoping that this was the bottom, hoping that the alt season was about to start. I entered altcoins right here, which means I missed this double bottom. Missed the next rise, Alti missed this decline. All this time, I was sitting and watching, and what I see is a double bottom with a retest of the bottom level, a bounce back up. I entered the altcoin market. Right here. What kind of chart is this? Remember the ticker, you can write it down. To open it on TradingView, just type it into the search bar right here and hit enter. You can also add it to your watch list. It's in my watch list as well. So this is the relationship between market cap of altcoins and market cap of Bitcoin. If chart is going up, it means these are strong Bitcoins. If it's falling, that means they're weaker. So in the alt season, these kinds of movements happen. These kinds of movements. It looked like a bottom. Looking like a bottom doesn't mean it's formed, or a bottom forms when the trend changes. We're stuck in a range from the big. The previous trend on the higher time frame is descending with volatility, and what's happening is happening. Update 1.2, 1 as a gift, and summary 1.2.2 happened as a gift. This was the flash crash on the 16th. I exited during this bounce from the altcoins. Also, note that on the 16th, altcoins weakened against Bitcoin, and Bitcoin dropped significantly. You weakened against Bitcoin overall. The exit was quite good, not at the very bottom. After the bounce, I'm not happy with my trade on the altcoin. There I'm more than satisfied. I'm not happy with the trade on the altcoins. So, what do I think will happen next? Note first that Bitcoin is still in an upward trend. So the global trend is upward. Here's the trend line from below. Everything is fine. So this decline is just a correction after reaching an all-time high. So Bitcoin is actually strong. It's just a correction, just a decline. You haven't seen such corrections in a long time. You've forgotten that this can happen if you're suddenly panicking. So there's nothing supernatural here. Everything is normal. As for the altcoin market, on the contrary, everything is bad. Let's take a look at Ethereum. Here's the trend line. If you're trading altcoins not against Bitcoin like I do, but against the dollar, here, the exit point for Ethereum was at 2,600. When the trend line was broken, when they drew the flag here, they squeezed up to the trend and broke it with a bearish engulfing. This should be the exit point, and you shouldn't be in at that moment. This is the very lowest minimum exit point. Technically, what's happening is a double top. Right now, we are at support at the neckline of this double top. And in general, it usually plays out like this, technically. And here I've marked the area of a potential bottom. Moreover, besides the fact that this is a double top, we also have this pennant, this triangle. We've already gone down too. This is the trend. This is a trend breakdown downward. It also means a breakout of this large triangle. Technically, when a triangle like this breaks, the price moves in the direction of the breakout, which means downwards. And when you have such a huge triangle on a larger time frame, the target is the lower edge of the triangle. So everything technically points to $100 for Ethereum. For example, I'm talking about Ethereum as a case emotionally. It's hard to believe that Ethereum could drop that much. For this reason, I actually think that the potential bottom for Ethereum could be at the next level. I've marked it $50 somewhere in this zone. I think it's quite possible, most likely, that the bottom will be somewhere around here. Can I be wrong? I could be wrong. Why? Because technical analysis indicates that $1,100 for Ethereum is the next target. As a person, not a robot, I can feel emotions, and emotionally, it's hard to believe that with such fundamentals the market could drop so much, but the technicals point to that. Whether to believe or not, that's your interpretation. Think what you want. I don't believe it. I think what 1700 is. It will be close to the bottom. Well, let's see what happens when Ethereum gets there. I won't go through every coin, every token. Let me show you something specific, Litecoin. It's the strongest right now in the market. Pay attention, there's a big pattern of higher lows. The level of this bottom also coincides with the neckline of the previous head and shoulders at the highs, and right now the price is above this level. But there's a big but, and there's a lot of potential for this movement to go up here. But keep in mind that the entire market is red, and Litecoin, being the strongest coin, is also red today. Does that mean if the market is going to the bottom, will Litecoin go down too? Up here according to its pattern. No, it won't go down. It won't go down with the market. Litecoin is probably the only coin right now where, well, here's the exit point. Yes, if you find Litecoin right now, here's the exit point where you shouldn't be in the market. So theoretically, you can be in the market here. This is the only coin you can be in right now. Is it worth being in it if the rest of the market is looking at the bottom? Well, most likely not. Of course, we do have precedents when some individual altcoins shoot up vertically. Well, you can think for yourselves. Maybe it really makes sense to hold on to it. Everything else looks really bad. I don't consider Tron at all. In my opinion, it's a financial pyramid. It also looks pretty good overall, but I'm not considering it. Everything else looks terrible. It looks awful. Take Solana, for example. Here's the exit point where you shouldn't be in the market, right here. Chain level, double top, broke through it, retested the exit. If you were afraid to exit here, thought that this was a false breakout and continued to be in the market, then mark yourself a low, and if the low is broken, exit here. So, well, those are the lowest exit points where you shouldn't be in the market anymore. And So for any coin, you can mark the levels and show them in hindsight. I trade altcoins against Bitcoin, not against the dollar. And I exited on the 16th. Where was it? Right here. After the drop, once I realized that I couldn't catch the bottom and that I had entered too early, which was a mistake, I drew some conclusions. After the flash crash, I exited the market during the bounce. Moreover, the bounce in altcoins coincided with a trend change in Bitcoin, and I exited overall. Well, even though I'm not happy with the code trade, it means that when it comes to Bitcoin, the market has changed here. In what format was I waiting here when I was exiting in the same story? And if you watch them, the flash crash, I mean, all those who are at record volume and now the volume is at a record high. Here at the highs were all those who bought in at the very top. And obviously, they set their stop losses somewhere, and that's why all these flash crashes are expanding. What is that about? They happen precisely because, firstly, there are a large number of coders. Right now, there are a lot of people in the market who have entered, and in case of failure, these very coders, these very traders are locking in their losses. Where? Well, usually it's under key levels, so there wasn't really a level here. But in my opinion, it was obvious, yes, this squeeze towards the moving average, and I'm surprised that there was no flash crash under Sotomoing here, because here people should have been recording their losses en masse. But, as it turned out, they did not do this. There was even another retest here. They went up, and after that they started to fall, and they started to fall not vertically, well, on a daily basis maybe. It looks like a vertical decline, but I look at the 5-minute period during the day, and at futures and 5-minute trading, I have 2 accounts down, U plus futures on, and there's no flash crash here. It's just a regular gradual movement with small bounces and minor consolidations. We're just falling gradually over the past few days. For those who don't look at the 5-minute chart at all, let me explain how Bitcoin usually behaves. The price is standing still, at some point, at some level, drawing some key zones. And as soon as it approaches these zones, people start locking in their losses. All those who entered at the top, within 5 minutes, well, maybe at most. Within 1 hour, that's when a movement of similar strength starts to drop. So, not over the course of several days gradually, but within an hour at most, sometimes even within 5 minutes, I was expecting a movement like that. This is called a flash crash. That didn't happen. There was a gradual decline. This means that the majority of those who entered here are still in the market. They haven't sold. What conclusions can we draw from this? The flash crash is postponed. In my opinion, it's obvious that the trend here is downward. After strong declines, there usually comes a strong bounce. This is a trend correction. Counter trend movement. The trend here is downward. We have a death press. It's all obvious. So is some counter trend movement expected? I expect so. Most likely there will be some kind of sideways movement after this, and in my opinion, after the sideways movement, it will drop to the lower boundary of that range. Everyone who is in the market is setting their stop losses, and after that there will be a roof of tears. They expect a movement like that. The only question is when it will happen. And I can't give it again because actually I was expecting this yesterday. From the 200 moving average, you could see that some kind of bounce was drawn. I thought it would be a full bounce, a full correction. This decline should happen. Well, something like that, plus a move into some sideways range. No, it was sold off immediately that same day. I even took a long position on the futures for 5 minutes. Here below, the formation of the diversion. Here was the level of the bottom. Exactly. So, the next level has been broken through. The breakout turned out to be false. So stop losses were set here by those who entered at the highs. And here their stop losses were taken out. Here, on the contrary, I took a long position to take out the stop losses. These long traders, and they took out my stop losses too. So I set my stop loss at this low. So I'm surprised. The market is working a bit differently. Now, I can even state the fact that it has changed. Just a week ago, it was different. Well, if we take 2 weeks ago, it definitely wasn't a lie. 2 weeks ago, it was different. Now it has changed. And the longer and stronger it is, this downward movement, for example, might continue for a few more days and go even lower. The stronger the drop, the stronger the rebound will be. Well, because after a strong drop, a strong rebound happens. First of all. Secondly, the longer the sideways movement will form. Moreover, if this downward movement reaches this, if the red zone reaches with this downward movement, then most likely it won't even take a month, as I thought. Earlier, it might go into forming the next sideways movement, or maybe for several months. Just pay attention to how many months we were stuck in this sideways movement at the very peak. Well, it turns out to be 104 days, 3 months, so it might take several months to form the next sideways movement, after which a flash crash is expected. Let's see. But the fact remains a fact. The stronger and longer this downward movement lasts, the stronger the rebound will be. The longer the next sideways movement will form, and the more players will be in the market, the stronger the next flash crash will be. I was expecting a rebound yesterday, but it didn't happen now. Well, there are just no levels here. Here's the nearest one I marked. How much is it? 77 maybe. Maybe we'll drop from here, or maybe there will be a rebound from here. Let's see. Well, here's a possible zone. Where could the rebound come from? I mentioned during the call with the students, we discussed and reflected on this topic. I marked this red zone as a buying opportunity. So I sold here somewhere around 72, 75, and I think I will be buying. It will all depend on the price action, of course. Will they buy there? Will it look like a bottom? Or we might just pass this level without even noticing. Well, why pay attention right here? These are the past highs, and actually, the global trend is upward. This is close to the trend line. These are past highs, and this is a very strong zone, a very strong level, and technically it will look very nice. Here was the high, a rebound with a new high, a rebound with a retest of the level, and some next movement upward. Ideally, in my picture of the market that I'm envisioning right now, the price, this upward movement shouldn't reach here. It might stop somewhere around here, there will be a rebound, and it will go up. A sideways movement might form somewhere around here. After that, there could be a flash crash. It's acceptable to break the trend line, but there shouldn't be a consolidation here. It should happen after the flash crash, but this is how it usually has been in the past. It tends to get bought back. And right around here, this zone will be a good entry point. If it drops here right now, I'll think very seriously about it. Should I buy or not if that happens? After the script I drew, I will buy. I also can't guarantee it 100%. There's a chance that the scenario I recorded a minute ago will happen, and I won't buy. And why? Because it all depends once again. Price action and in the pull at that moment. Stay tuned for updates so you don't miss my thoughts, my trades, and this tube. I appear rarely. I've been saying this for the last few years. Subscribe to my other social media. Links are below. Thank you. Good luck.